All right, so you want to get inside the mind of a winning trader. Well, today, our deep dive takes us into Mark Douglas's Trading in the Zone.
Oh, yeah.
We're not talking like basic charting stuff here, you know.
Right.
You already know that stuff.
Right.
This is about the mental game, the often overlooked key to like consistent profits.
Yeah, it's fascinating, how Douglas reframes the whole trading experience. He argues that most traders, they focus on fundamental or technical analysis, right?
Right.
But mastering your own mind.
Yeah.
What he calls like mental analysis. That's the real game changer.
Oh, it's so true. I've definitely fallen into that trap of thinking like, if I just find the perfect indicator, I'll crack the code.
Right.
But Douglas is saying that the code is more about like self-mastery than market mastery.
He actually compares the journey of becoming a consistently profitable trader to that of a concert pianist.
Oh, wow.
Years of dedicated practice, not just talent, are what lead to virtuosity.
Oh, I love that analogy.
Yeah.
So where does this journey begin? Like, what's the first step towards building that trader's mindset?
Well, Douglas starts by addressing the allure of trading. You know, the freedom, the potential for wealth.
Right.
Those are powerful motivators.
Yeah.
But he doesn't shy away from the dark side either.
Okay.
The psychological traps that can sabotage even the most skilled traders.
You mean like getting hooked on those random wins?
Yeah.
Thinking you've got it all figured out only to like crash and burn later?
Exactly. He calls those random rewards.
Yeah.
And they can be incredibly addictive.
Oh, yeah.
Leading to overconfidence and reckless risk-taking. But what's really insightful is how Douglas links this to the unwillingness to take responsibility. He argues that many traders are stuck in a cycle of blaming external factors for their losses.
It's easier to blame the market or the news or even Mercury being in retrograde than to own up to our own mistakes, right? But how does taking responsibility actually translate into better trading?
Well, think of it this way.
Okay.
Every trade, whether it's a win or a loss, provides valuable data.
Okay.
But if you're busy blaming these external forces, you're missing out on crucial feedback. You're essentially denying yourself the opportunity to learn and improve.
So it's not just about feeling bad or guilty about the losses.
Right.
It's about using them as data points to refine our approach.
Yeah.
To understand where our thinking might be misaligned with the market.
Precisely.
Okay.
And this leads to the next crucial concept. Consistency. Douglas debunks the myth that consistent success is about some magical formula or winning streak.
Right.
It's about cultivating a mental state that allows you to execute your strategy with discipline, regardless of market conditions.
So instead of chasing those euphoric highs of big wins, it's about focusing on the process on making sound decisions based on your predefined rules and risk management.
That's the heart of it. He argues that true consistency stems from a deep understanding of yourself as a trader.
Yeah.
Your strength, your weaknesses, and your emotional triggers. It's about building a trading system that aligns with your personality and risk tolerance.
Okay, so we've talked about the importance of taking responsibility and building consistency, but there's still this element of the market itself.
Right.
How do we navigate the inherent uncertainty and the unpredictability of the markets?
This is where Douglas introduces a mind shift.
Okay.
He argues that the market doesn't care about individual traders. It operates on probabilities, not guarantees.
Okay.
He uses the analogy of a casino. I think it's brilliant.
I'm intrigued. How does the casino analogy apply to trading?
Just like a casino doesn't care if you win or lose on any given spin of the roulette wheel. The market doesn't care about your individual trades.
Right.
Both operate on a system of probabilities where the house, or in this case the market, has a slight edge.
So instead of trying to predict the market's every move with 100% certainty, we should be thinking more like a casino.
Yeah.
Focusing on the long game and managing our risk accordingly.
Exactly. Successful traders like casinos understand that they can't win every hand.
Right.
It's about playing the odds, having a statistically sound strategy, and managing risk so that losses don't wipe you out.
But how do we actually shift to this thinking in probabilities mindset? It seems so counterintuitive to how most people approach trading.
Right.
We come in wanting to beat the market.
Yeah.
Make quick profits, prove how smart we are.
You're absolutely right. It is counterintuitive. Yeah. And that's precisely the mindset that leads to emotional trading, chasing losses and ultimately blowing up your account.
Yeah.
Douglas challenges us to let go of that need for certainty and embrace the inherent uncertainty of the market.
Okay. I'm starting to see how this connects to the earlier points about responsibility and consistency.
Yeah.
If we accept that we can't control the market, we can focus on what we can control, our own decisions, our risk management, and our emotional responses.
That's a crucial insight, and this brings us to another key concept that Douglas explores in depth, the power of beliefs. He dives deep into how our beliefs, both conscious and unconscious, shape our trading reality.
You mean like those limiting beliefs we hold about ourselves or the market?
Exactly.
Things like, I'm not lucky, or the market is rigged against me.
Exactly. He gives some powerful examples of how these seemingly harmless beliefs can become self-fulfilling prophecies, leading to bad decisions and reinforcing negative patterns.
This is making me think about my own trading journey. I've definitely had moments where like fear or doubt crept in.
Yeah.
And it almost always leads to bad trades. So how do we break free from these limiting beliefs? It's one thing to identify them.
Yeah.
But how do we actually change them?
Douglas suggests a process of examining the evidence. Are these beliefs based on facts and data? Or are they just stories we've been telling ourselves? It's about challenging those narratives and replacing them with more empowering beliefs that are aligned with successful trading.
So instead of I always lose, it's about shifting to I'm learning and improving with every trade. It's about reframing those negative experiences as opportunities for growth.
That's a great way to put it. And this reframing process is essential for developing what Douglas calls the trader's edge.
Okay, so we've covered taking responsibility, building consistency thinking in probabilities, and challenging limiting beliefs.
Yeah.
It feels like all of this is building towards a more holistic understanding of what it means to think like a trader.
You're catching on quickly, and that's exactly where we're headed next. Douglas brings it all together by outlining the key elements of a successful trader's mindset. Thinking like a trader is about like integrating all these principles we've been discussing. It's about weaving them together into a mental framework that supports consistent success. It's like having a mental toolkit specifically designed for navigating the complexities of the market.
It sounds almost like we're building a mental fortress, protecting ourselves from those impulsive, emotion-driven decisions that can really derail our trading.
That's a great way to visualize it. And one of the key building blocks of this mental fortress is what Douglas calls personal rules.
I've heard traders talk about having rules, but it always sounded a bit vague to me. What exactly are these personal rules and how do they fit into this like trader's mindset?
Think of your personal rules as your trading constitution, a set of guiding principles that govern how you approach the markets, how you manage risk, how you react to wins and losses. Basically every aspect of your trading.
So it's not just about having a strategy for entering and exiting trades. It's about having a framework for making decisions, for staying disciplined, even when emotions are running high.
Exactly. These rules are like the guardrails on a mountain road. They keep you on track and prevent you from veering off course. And here's the interesting part. Douglas emphasizes that these rules should be personalized. There's no one-size-fits-all approach.
So it's about understanding your own strengths and weaknesses as a trader.
Precisely.
Identifying those patterns of behavior that might be holding you back.
Exactly. Let's say you have a tendency to get emotionally attached to your trades and hold on to losers for too long, hoping they'll come back. A personal rule might be, I will always set a stop-loss order and honor it no matter what. Or maybe you're prone to chasing big wins and taking on too much risk after a winning streak. A rule might be, I will never risk more than 2% of my capital on any single trade.
I see. It's about creating those boundaries that keep you in check and prevent you from making those impulsive, emotion-driven decisions that we all know can sabotage our trading. It's like having those pre-commitments in place that help you stick to your plan even when things get crazy in the market.
That's exactly it. These rules act as your anchor in the storm, helping you stay grounded and focused on your long-term goals rather than getting swept away by the market's volatility. And this ties directly into another key concept.
Okay.
Predefining your risk for every trade.
Okay, this is starting to sound familiar.
Yeah.
Didn't we touch on this earlier when we talked about the casino analogy and thinking in probabilities?
We did, but it's worth emphasizing because it's such a fundamental principle of successful trading. Predefining your risk means knowing exactly how much you're willing to lose on a trade before you even enter it.
Right.
It's like setting your limit at the roulette table. You decide how much you're comfortable losing before you even spin the wheel.
So it's not just about having a stop-loss order in place.
Right.
It's about having a clear mental stop-loss as well. It's about knowing your walk-away point before you even get involved in the trade.
That's a great way to put it, and it's essential for detaching yourself from the outcome of any single trade.
Right.
And focusing on the long game, remember, we're not trying to win every single hand.
Right.
We're playing the odds, managing our risk, and letting the probabilities play out over time.
All right, so I've got my personal rules in place. I'm predefining my risk for every trade.
Okay.
And I'm thinking in probabilities.
Yeah.
What else can I do to, build this trader's mindset?
Douglas talks about the importance of creating a positive feedback loop in your trading. This means focusing on the things you're doing well, acknowledging your progress, and celebrating your wins, even the small ones.
I think this is something a lot of traders struggle with.
Yeah.
Myself included. It's so easy to get caught up in those losses.
Right.
And beat yourself up over mistakes.
Yeah.
But if you only focus on the negative, it can be incredibly discouraging.
Absolutely. Trading is a challenging endeavor.
Yeah.
And it's important to acknowledge and celebrate your successes along the way.
Right.
This helps you stay motivated, build confidence, and reinforce those positive trading habits. Remember, even on the path to mastery, a concert pianist enjoys playing a beautiful chord a single successful run.
That's a great point.
Yeah.
It's about finding that balance between learning from your mistakes and acknowledging your wins.
Right.
It's about creating a positive mental environment that supports your trading journey.
Exactly.
But what about those times when things don't go our way?
Right.
How do we handle those inevitable losing streaks without letting them derail our progress?
This is where the concept of detachment comes in.
Wait a minute, didn't we already talk about detachment?
We touched on it earlier when discussing risk management and thinking in probabilities.
Okay.
But it's such a crucial aspect of the trader's mindset that it deserves a deeper dive.
Okay.
Detachment is about separating your sense of self-worth from your trading results. It's about understanding that you can make a good decision and still have a losing trade, and vice versa.
So it's about staying neutral, almost like an observer of the market.
Yeah.
Rather than getting caught up in the emotional roller coaster of wins and losses.
Exactly. Think of it like watching a movie.
Okay.
You can get engrossed in the story and feel the emotions of the characters.
Yeah.
But, it's just a movie. You don't take it personally.
That's a brilliant analogy.
Yeah.
So how do we apply that to trading? How do we detach ourselves from those emotional ups and downs that are so inherent in the market?
It starts with understanding that the market doesn't care about your feelings. It's not out to get you or to make you rich.
Right.
It simply exists.
Yeah.
And within that existence, there are patterns and probabilities that you can learn to exploit. But you can exploit them if you're constantly reacting emotionally to every tick of the chart.
So it's about shifting from an ego-driven approach where you're trying to prove yourself right or beat the market to a more objective analytical approach where you're simply playing the odds like that casino we talked about earlier.
That's the key. It's about letting go of that need to control the market.
Okay.
And accepting that uncertainty is an inherent part of the game.
Right.
And it's about developing the mental resilience to handle those inevitable losing streaks without letting them shake your confidence or your commitment to your process.
Okay, so I'm letting go of my ego. I'm accepting uncertainty.
Okay.
And I'm detaching myself from the outcome of each trade.
Yeah.
This is starting to sound a bit Zen-like. Is that what Douglas means by trading in the zone?
You're getting close.
Okay.
Trading in the zone is a state of mind where you're fully present, focused, and objective.
Okay.
It's a state of flow where you're executing your strategy with precision and confidence without letting emotions cloud your judgment.
But it's not about suppressing emotions altogether, right?
Right.
It's more about managing them and not letting them dictate our trading decisions.
Yeah.
Because emotions are part of the human experience.
Right.
We can't just turn them off.
You're absolutely right.
Yeah.
It's not about becoming some kind of emotionless trading robot.
Yeah.
It's about being aware of your emotions,
Mm-hmm.
understanding how they can influence your trading,
Yeah.
and developing strategies to keep them in check.
Okay.
It's about finding that balance between emotional awareness and objective analysis.
This is also fascinating. It feels like we're peeling back the layers of the onion and getting to the core of what it truly means to be a successful trader.
Yeah.
I feel like I'm starting to see the market and myself in a whole new light.
That's the power of exploring trading psychology. It's a journey of self-discovery that can lead to profound insights and transformative growth, both as a trader and as an individual.
Right.
And the insights we've uncovered today, while powerful on their own, are just pieces of the larger puzzle Douglas lays out in Trading in the Zone.
I'm eager to put all these pieces together.
Yeah.
So far, we've covered a lot of ground, from understanding the psychology behind market behavior to rewiring our own mental circuitry.
Yeah.
But how do we take all this theoretical knowledge and translate it into tangible actions, into a practical approach that we can use every day in our trading?
That's a great question, and that's precisely where we're headed next. In the final part of our deep dive, we'll explore the practical applications of these concepts and discuss how you can start implementing them in your own trading journey. We'll talk about specific tools and techniques that can help you cultivate that trader's mindset and elevate your trading to a whole new level.
All right, so we've unpacked a ton of powerful concepts from trading in the zone.
Yeah.
But, as they say, knowledge is only potential power.
Right.
Now, let's talk about turning that potential into action. Like, how do we actually implement these ideas in our everyday trading?
Bridging that gap between knowing and doing.
Right.
That's where the real magic happens. Douglas provides some very practical tools, and one of the most effective is developing a pre-trade routine.
I've heard this mentioned before, but honestly, it sounded a bit like a chore to me. Why is a pre-trade routine so crucial?
Imagine a surgeon going straight into surgery without scrubbing up, or an athlete stepping onto the field without warming up.
You'd be worried, right?
Yeah.
Trading's no different.
Right. Okay.
A pre-trade routine ensures that you're approaching the market from a place of clarity and discipline, not driven by impulse or emotion.
Okay. I'm starting to see the value. It's like having a mental checklist to make sure you're not missing any crucial steps before you put your capital at risk.
Precisely. And this checklist should cover several key points. First, reaffirm your trading edge. What specific advantage does your strategy offer in the current market conditions? This isn't about blind faith. It's about having a rational basis for your decisions.
So no more FOMO trades or jumping into a stock just because it's making headlines.
Right.
It's about having a clearly defined reason for entering the trade.
Exactly. Next comes thorough market analysis. Are the current conditions truly aligned with your strategy? Are there any upcoming news events or economic data releases that could throw a wrench into your plans? It's like checking the weather forecast before heading out on a hike.
Yeah.
You don't want to get caught in the storm unprepared.
Perfect analogy.
Yeah.
And since we're talking about preparation, your pre-trade routine absolutely must include risk assessment. This is where we bring in that pre-defining your risk concept we talked about.
Right.
How much are you willing to lose on this trade? Where is your stop loss? What's your profit target?
Right.
These aren't just numbers on a screen. They're emotional boundaries that protect you from making impulsive decisions when things get heated.
It's like having that mental stop loss in place before you even place the trade.
Yeah.
A way to detach yourself from the outcome of that particular trade and focus on the bigger picture.
Exactly. And finally, before you pull the trigger on any trade, do a mental check-in. How are you feeling? Calm, focused, objective.
Right.
Or are you anxious, stressed, maybe even a little overconfident after a recent win?
This is huge. I've definitely made some questionable trades.
Yeah.
When my emotions were running high, good or bad.
Right.
It's like taking your emotional temperature before making any big decisions.
And just like you wouldn't go for a run with a fever.
Right.
You shouldn't trade when you're not in the right headspace. Sometimes the best trade is no trade at all.
So this pre-trade routine really is like having a set of mental guardrails to protect ourselves from our own worst enemy, ourselves.
Right.
What other practical techniques does Douglas suggest for building that trader's mindset?
One that I find invaluable is keeping a trading journal.
Okay.
This goes beyond just tracking wins and losses. It's about recording your thought process, your emotional state, and the rationale behind each trade.
I've tried journaling before, but mostly just focused on the technical details. I didn't really consider the emotional aspect. Why is that so important?
Think of your journal as a mirror.
Okay.
Reflecting your trading habits, good and bad. It allows you to spot patterns in your behavior that might be sabotaging your success. Maybe you notice that you tend to overtrade after a losing streak or become overly cautious after a big win. This awareness is the first step towards breaking those destructive cycles.
It's like having a personal training coach who helps you identify those blind spots you might not even be aware of.
That's a great way to put it.
Yeah.
And as you review your journal, pay close attention to those emotional responses to wins and losses. Did a winning trade make you feel euphoric and invincible? Did a losing trade make you want to chase your losses or revenge trade? Understanding these triggers is crucial for building emotional resilience.
Okay, so let's say I've identified some of these negative emotional patterns. What can I do to break free from them? Is it just a matter of willpower?
Willpower can definitely help, but it's not the whole story. Douglas advocates for incorporating mindfulness practices into your trading routine.
Mindfulness, I usually associate that with yoga and meditation. How does that apply to trading?
The principles are the same. It's about developing a greater awareness of your thoughts and emotions without judgment. This could involve meditation, deep breathing exercises, or even just taking a few minutes to step away from the computer and clear your head when you feel those emotional triggers kicking in.
So it's about finding ways to calm that inner critic, that voice of fear and doubt, and cultivate a sense of inner peace, even amidst the chaos of the market.
Exactly. It's about finding that stillness within yourself, which allows you to trade with clarity, discipline, and confidence.
This has been an eye-opening deep dive. I'm starting to realize that mastering my own mind is just as important, if not more so than mastering any technical analysis technique.
And remember, this is a lifelong journey. Trading in the Zone isn't a book you read once and put away. It's a resource to revisit as you evolve as a trader. The markets are constantly changing, and so are you.
One final question. Douglas talks about embracing the uncertainty of the market. But as humans, we crave certainty. How do we reconcile those two seemingly contradictory ideas?
It's not about eliminating uncertainty that's impossible in trading, and frankly in life. It's about shifting your perspective. Instead of seeing uncertainty as a threat, see it as an opportunity. An opportunity to learn, to adapt, to grow.
That's a powerful reframing. It's not about trying to predict the future. It's about becoming comfortable with not knowing and developing the resilience to navigate whatever the market throws at us.
Precisely. And remember, you're not alone on this journey. Countless traders have walked this path before you. And their wisdom, as captured in books like Trading in the Zone, can serve as a guide.
This deep dive has been invaluable. I feel like I have a whole new set of tools and strategies to approach the market with more confidence and clarity.
Great.
Thank you so much for sharing your insights and expertise.
It's been my pleasure. Remember, the power to unlock your trading potential lies within you. Embrace the challenge, stay curious, and never stop learning.
To all our listeners, we hope this exploration of Trading in the Zone has sparked your own journey of self-discovery as a trader. Remember, mastering the mental game is not a destination, it's an ongoing process. So keep learning, keep growing, and as always, happy trading.